As young investors, it's essential to make smart financial decisions that lay the foundation for a secure and prosperous future. And while small daily expenses may seem insignificant at the time, their cumulative impact can significantly affect your long-term financial goals. Now in this video, we are going to explore the real math behind the opportunity cost an investor might or might not be giving up by purchasing, for example, a $5 cup of coffee on a daily basis. Instead, for example, investing that same exact $5 into something like a dividend growth ETF like SCHD. Now we are going to go over all this and more. Right after you please drop a like on this video and subscribe if you like content like this. Now before we get any further, a quick preface. I am personally a huge fan of coffee and think that everyone should live their own life exactly how they want to live it. And I'm not telling anyone to skip out on their daily delicious $5 cup of coffee, but still I'm going to show you in detail what the opportunity cost is, which is honestly kind of shocking. But first, a little bit more background on me. I'm currently 30 years old and I've sacrificed a lot since a young age to become completely financially independent at this time. And with now owning an over 7-figure portfolio where my monthly dividend income is north of $6,000 per month. Now I tell you this not to brag, but to remind you all that there is opportunity cost in everything that we do, and with proper discipline and hard work, I was able to achieve this, which means that any one of you can as well. So let's just say that you are a young investor and you are on board to invest the $5 per day into a high quality dividend growth ETF in order to hopefully allow you to generate some long-term cash flow in dividends and maybe even retire early. You then might have the question, okay, well, what dividend growth ETF should I go with? Now this is a great question because there are so many great high quality dividend growth ETFs out there. And the truth being that diversifying into many of them, having a small piece of all of them in your portfolio is what I personally like to do. But for this video's example, we're going to keep it simple. We're going to look into what it would look like long term if a young investor was to give up that $5 daily cup of coffee and invest it into SCHD instead. Now, if you don't happen to be familiar with what the SCHD ETF is, it's also known as the Schwab US Dividend Equity ETF. And it's a very popular exchange-traded fund that aims to provide investors with exposure to high-quality US dividend-paying stocks. The fund is managed by Charles Schwab Investment Management Group, and this fund seeks to track the performance of the Dow Jones US Dividend 100 Index. Now this index is comprised of 100 US companies that have a history of consistently paying and raising dividends over the long term. These companies also have a track record of strong financial performance, which makes this fund, in my opinion, very high quality. Now, just like any other ETF, SCHD is easily purchased on most exchanges and with most brokerages offering fractional purchases. The $5 per day purchase of SCHD can easily be done. Now, a little bit more about the SCHD ETF just to show you what has happened historically with the fund, to give you an idea of what a long-term investment into a fund like this could look for a young investor in the future. Now, SCHD has a very cheap expense ratio of just 0.06%, so a long-term investor doesn't have to be too worried about having a costly expense ratio. But to go back in history all the way back till October 2011, SCHD was trading at around $26 or $27 per share. Now, just a matter of 10 or so years later, SCHD is almost 3 times as valuable, currently trading pretty close to the middle part of the 52-week range at $71 and some change. Now, SCHD is up 175% plus on the all-time chart. So at this point, at least historically speaking, this ETF does offer some massive capital appreciation, which means this investor's overall portfolio value should continuously go up, at least if history were to repeat itself. But SCHD also has a great diversified portfolio of around 100 different stocks. Now, with the diversification intact, this makes it very easy for a long-term investor not having to do all that much consistent daily research. And although monitoring all the different holdings within SCHD is still important, you're going to know that for the most part, the majority of SCHD's holdings are going to be here for a long time. Now, the holding breakdowns are industrials at 17%, healthcare at 15%, financials at 14%, consumer defensive at 13%, technology at 13%, consumer cyclical at 9%, energy at 9%, communication at 4%, basic material at 1%, and utilities a small portion. Now, what's also important about SCHD's holdings are the top 10 largest of them. These holdings, all for the most part, are in a strong financial position and all pay a dividend with an exceptional dividend growth rate, which means these companies have a history of raising their dividends consistently over time. Now, these top 10 holdings are Broadcom, Pepsi, The Home Depot, Merck, Cisco, Coca-Cola, Texas Instruments, Chevron Corp, Pfizer, and Verizon. Now keep in mind, SCHD every so often does go through a reconstitution where their top 10 holdings and many of their holdings do switch out, so that's important to keep an eye on if you are looking to invest into a fund like this. Now moving over to SCHD's dividend, looking at SCHD's trailing 12-month dividend yield, which is 3.68%, which gives newer investors into SCHD a really decent starting dividend yield, which means their investment is going to cash flow a decent amount pretty much right off the bat. Now, SCHD does pay a quarterly paid dividend, and it doesn't take a genius to see that the dividend has been continuously going up and up and up since the last 10 or so years. For example, back in 2012 or 2013, SCHD was paying around 20 to 25 cents per share per quarter. Now, just fast forward around 10 or so years later, the dividend has almost tripled, which means that for investors that bought back here and just held on to their shares of SCHD and did nothing else, they are getting paid almost 3 times as much just by holding on to the investment for a measly 10 years. And although for some of us thinking about holding on to an investment for 10, 20, 30 plus years might seem kind of crazy at first, you can ask any seasoned long-term investor out there, time does go by pretty quickly. And most all long-term investors wish that they would have bought more of X, Y, or Z high-quality dividend-raising stock or ETF much earlier. Next, it's time to get to the point of the video where most of you guys came here for. Let's go through and see how much an investor would have and earn from dividends long term if they were to just invest $5 per day every single day into, for example, a fraction of a share of SCHD instead of buying that delicious cup of coffee on a daily basis. So right here we are at the dividend calculator where we have a starting balance of $5,000. The initial annual dividend yield for SCHD, for example, is 3.68%. And the expected annual dividend amount increase I put at 10%. Now SCHD has around a dividend growth rate of 10% over the past 10 years, but keep in mind dividend growth is going to change on a yearly basis, so this is only an estimation. Next we have the annual contribution of $1,825, which is just $5 per day every single day of the year. And again, for this video, this is just an example. This entire situation could change drastically if an investor was to say put $10 per day into an ETF like SCHD, or maybe put $25 per day into an ETF like SCHD. Obviously the numbers are going to change depending on what your input level is, and I definitely implore all you guys to play around with one of these dividend calculators and really take the time to explore and understand how the power of compounding math works. Years ago, when I first started messing around with dividend calculators, I was shocked to see what the numbers could snowball into long term. But let's go ahead and calculate this and see what we get. So here we have the dividends and the principal on a yearly basis. Year number 1 with that $5,000 start, we'd be at just $186 or so in annual dividends. Year number 2, with all the dividends reinvested plus $5 per day, added into more shares of SCHD, the principal of the portfolio would already be up to $7,100 plus dollars. And $284 in annual dividends, which is pretty crazy because just by year 2, the annual dividend amount is already moving up very quickly. By year number 3, the principal of the portfolio would be at $9,400 and over $400 of annual dividends. Year number 4, $11,800 and $540 per year in annual dividends. Now by year number 5, this portfolio would be worth $14,500 and $700 plus in annual dividends. By year number 8, this portfolio would be at $23,000 plus with over already $100 per month in dividends, over $1,400 per year in dividends. If we skip down a little bit and get to year number 15 years in of just adding $5 per day, you could even have this being invested on autopilot through most of the brokers. By 15 years in, this investor would already have almost $6,000 per year in dividends. Now I know what you're saying, $6,000 per year, 15 years in might not seem like all that much. But remember, this investor is just investing $5 per day, which is relatively speaking a very, very small amount of money. And just in a second here, you are going to see the power of compounding really kick in, and these numbers are going to get continuously bigger and bigger. By year number 19, this portfolio is already over $100,000, with over $13,000 a year in dividends. Year number 20, this portfolio is $122,000, with $16,400 in dividends per year. And as you see, from pretty much year 20 to 30, this investor is going to see the value of their portfolio exponentially really start to move up, as well as the annual dividends paid really start to get juiced up. By year number 25, this investor has $271,000 in portfolio value and over $51,000 in annual dividends. And if we skip all the way down to the end, 30 years in, which definitely is a long time to be invested. But again, which is $5 per day, the majority of us wouldn't really even notice that. By year number 30, this investor would have $740,000 worth of SCHD in theory, and over $200,000 a year in dividends. So overall, I wanted to give everyone a really clear view of what the power of compounding can do if an investor does stick with an investment long term, even if it's a very relatively small amount of money. And when it comes to making financial decisions, especially early, it's crucial to consider the long-term impact of our choices. Like we just saw by redirecting just $5 a day from buying a cup of coffee, and instead investing that money into an ETF like SCHD, you unlock the power of compounding, benefit from diversification, and position yourself for long-term wealth accumulation. Ultimately, investing to SCHD increases your chances of attaining financial independence much earlier than that delicious cup of coffee. But I want to hear what you guys think down below. Do you think it's worth investing a small amount of money on a consistent basis? Or on the other hand, is that $5 cup of coffee per day worth it? If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always for stopping by, and I'll see you in the next